All right, everyone, welcome back for the episode of Carnivore Trades. Today is Friday, January 13th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, markets here, a little bit of a dip and flip kind of candle today. So gap down this morning and really just a float right back up, V-shape in the morning, little pullback, and we've just kind of floated higher all day long. Now the significance here is everybody's going to be talking about it all weekend long. Now everybody's got a different different way of it being drawn in, but you guys can see it right here, the all-time high trend line. We're hovering right on that right now. And we are above it right now. Now, again, some people might have theirs, going through the wick of this candle. Some people might have it a little bit higher, a little bit lower. You can see on the ES, however, we're pretty much clearly through that. We're definitely going to close above it. And this is important to me because I've been saying on here, I think the pain trade is higher. I said that yesterday, and I still think that it's not much higher, but in the near term, I think this market still has a little bit of buoyancy to it. This is a big part of it. So if we get a close above this trend line here, and then we'll see the SPX there, basically, see they're all kind of a little bit different, the SPY, the SPX, and the ES, but they're all hovering right there. The SPX is above that. And you're going to have some people say over the weekend, oh, it was below it, oh, it was above it, everybody's going to have a little bit of margin of error, right? But the point is we're basically on it. And this is important because I think a lot of people put a lot of stock into trend lines, and they are important. And obviously this has been a good trend line. I mean, there's no denying that. But just because you break a trend line doesn't mean that the bear market's over. I just want to point that out. In fact, we're going to go back and take a little history lesson here. Let's go back to 2000. And you can see from this top here, we're not worried about the top in March, but the top in September, just go down into this area. You can see you had a trend line that went through the majority of, well, pretty much all through 2001, and it ended up breaking in 2002, and it rolled over. So there is, other precedents, or there is historical precedents for these trend lines to fail and still not really matter. Like just because you break above a level doesn't mean that it's all of a sudden, okay, that's it, the bear market's over. I just want to point that out. And the reason I'm saying this is because if you get a close today, we got 10, 12 minutes left. So I should be able to take you guys into the close here. If we get a close above that trend line here today, before a 3-day weekend, remember the market's closed Monday, before a 3-day weekend, a lot of bears are going to start really sweating, and they're going to start questioning, like, oh, is this really, are we in is the bear market over? You're going to hear talk all weekend long, soft landing, Fed pivot, that type of deal. And that's going to bubble up for 3 days. And then, that into the next weekend. So I think, this is part of what needs to happen in order to get the bears to kind of flip over to bull. And that's how markets top out. It's just the way it happens. Back here, for instance, a lot of people shorted into this zone here in August. I did short myself. We initiated some short positions here, and it did go a little bit higher, but obviously we managed the risk properly, so we didn't get hurt by this. We actually made money on the whole leg down. But my point is, you kind of, sometimes you need to have that secondary push up that nobody expects. Sometimes you need to have that secondary move or a trend line break or a 200 moving average close something of that nature in order to really get the last people out of the market so that it can finally roll over. So I think that's significant here. And I still expect vol. So let's look at the VIX here. VIX making new lows here. That's why this morning when I saw the gap down on the spiders, I saw the VIX just getting absolutely whacked. And I said, yeah, this little dip here is not going to last very long. The VIX getting crushed, VIX-E getting crushed here. I do expect vol to be under pressure here for most of next week. We do have VIX expiration next week, and we also have options X for the month of January. January OPEX is also a leap month, as well as December. So there's a lot of premium expiring. And the market makers and the institutions like to have the VIX suppressed into that so they can keep the market positioned wherever they want it. So I do expect the VIX to remain under a little bit of pressure next week. Doesn't mean it won't bounce here. I mean, it's down to the 18 level now. And once this candle rolls over, Tuesday, see this candle here, we'll be at 52-week lows, literally at 52-week lows. So, again, it could bounce here. And I do think the VIX is about to turn around. We're not quite there yet, but, and again, coinciding with the market, there's not a ton of upside, if you ask me. And I don't think, I've been telling my members time is a little bit more important than price here. We're not quite there yet. Like I said yesterday, I wouldn't be opening longs here. I wouldn't be open. If you have longs, you can ride them. Just make sure you're trailing your stop and protecting your position, maybe taking some profits as you go higher, but I would not initiate new longs here. But at the same time, I'd advise against going all in short. If you want to start a few positions, that's perfectly fine. That's kind of what I'm doing here. Just to let you guys know. But I think what's happening right now, this is exactly what I want to see. The last thing I wanted to see yesterday was a massive sell-off on CPI, because it's just hard to get in when you have, a big gap up and then you have a violent move. If you're not fully positioned for that move specifically, it's very hard. You basically have to chase it down, which I never like doing. I try to avoid that. But in any case, I like what I'm seeing here. And I think the market will still give it the upside bias here. Again, like I've been saying, semiconductors holding up well. So as long as they're holding up, I'm generally not going to get too bearish. I will say the transports. So now this is what we'll be talking about this week. The transports are red today. Now it's just one day, but you got the markets green. All the markets, all four indices are green. And the transports are starting to turn red here. They are off the lows. But still red. So if that continues, transports start to back off and the spiders start to move up or hold up, that's going to be a divergence we need to keep an eye on. Now, a lot of the reason why the transports are down today is because, there's the jets there, but Delta reported that is off the lows as well. But you're seeing these airline stocks start to get, they're starting to report earnings here. I believe, was there another one today that reported an airliner? Let me just double check on my other screen here. Perhaps not. Delta is usually the first one anyway. Yeah, okay. We have American Airlines next week, JB Hunt. A lot of the transports reporting next week. And then, of course, we have the rest of United's reporting Tuesday. Okay. And then we have the rest of the banks next week as well. But anyways, the transports are down. So it could be, and like I'm not sure if I said this to you guys. I know I said it to my members, but this is obviously a pre-earnings squeeze, right? Like, if you were short here, you don't want to get caught ahead of earnings, so you just cover to basically reduce your risk. I mean, this is obviously a short squeeze. So basically what I'm saying is once these earnings are out of the way, you could see the transport start to come back in, and specifically, the jets, the airline stocks here. Look at American Airlines. A very strange candle here, by the way, on jets. A gap up and a gap and go, and then a gap and go on a gap down and then a go. It's a very, very strange price action there on jets there today. But in any case, we'll keep an eye on those transports there. Let's look at the Qs here before we get over to everything else. So that is going to close above 280. And again, I told you guys this can get a little bit higher, right? So it's basically into that 100 period moving average right now. On the weekly, we're through the 200 and the 20 right now. We're basically sitting right on the 200. But again, just because you get above a level doesn't mean it's, again, kind of like what I was saying with this trend line. Just because you get above a level doesn't mean that, that's it, bear market over, trend change. We got through the 20 moving average a couple of times. 1, 2 up here, 1, 2, 3 weeks there, a couple of weeks here. We whipped through it a few times here. You can get through these levels and still roll back over. So don't anoint anything as, all right, that's it, it's over. We're back above the 200 moving average. That's it. But it is a sign of strength here in the near term. We have to respect this market in the meantime. So just be careful of that. Look at the Russell 2000 again. The Russell continuing to lead up 58 basis points. Q's up 64. SPY up 39. And Dow up 27. So again, we're still seeing the NASDAQ and the Russell lead. So that's still a sign of strength here in the near term. Again, that's why I'm not getting too bearish here. Now, Is this going to last very long? I don't think so. I don't think so. But for now, we have to respect it here. It looks like the Russell wants to go up and test, 190. It wouldn't even surprise me if it made a new high, like a new nominal high, just to, really sucker everybody in here. So we'll watch that level. You have a pivot right there. These are pivots here. And then that red bar, of course, is going to be major resistance on the IWM. But again, still holding up well. The Dow here via the diamond, again, kind of like the Jets here, gapped down and then rallied back up nicely throughout the day. UNH reported. That's a big Dow component. Look at that candlestick on UNH, gap down all the way back up, and now well in the red here. Big distribution candle there on UNH. So that is coming in as well and putting pressure on XLV, although XLV is green today. Anyways, okay. SMH, so we mentioned that earlier, again, gap down and back up like everything else, still below yesterday's high. So that is a slight negative there, whereas the spiders looks like just got above that level. Yep, just barely. So you're seeing the semis slight underperform a little bit. Yeah, the Q's got above yesterday's high as well. So slight underperformance there. Again, it's just one day, but if we start to see this continue, this type of thing continue, it's going to be a major red flag. So keep that on your radar here. Always watch the semis. Cloud software here. We took profits on our CLDL yesterday, and I made a mistake. That was actually the 5th winner this year, not 4th. So just get that in there. But in any case, CLDL, or I should say IGV here, up 30 basis points, again, above yesterday's high. This is hanging in there. Probably wants to go test that gap. And then, of course, you have that big reversal bar, which will be pretty good resistance there on the daily. And then the transports, which we just mentioned, again, you have that downsloping trend line. If this starts to roll over, it's going to be a red flag for the markets. So be careful of that. Interest rates here higher, 10-year up by 180 basis points, TYX, the 30-year up 1.34. So yields coming back a little bit here. The 2-year, little reversal there today. This pattern is still just fine. I wouldn't have any problems with it. You had a nice test candle yesterday, and you finished green, and we paired back some of those gains today. As far as is concerned, there's nothing really wrong with it. I still think it can get up to that inverse head and shoulder target. So no real issues here with rates. If they do start to break down, if the 2-year does start to break down, that's going to be a humongous, and I mean humongous problem for the market and for the Fed. Home builders continuing to be resilient here. XHB and ITB both hit my upside objective yesterday, and they're hanging in there today. Again, I could see a little bit more upside here. They're both basically the same price. The target is basically 68 for both of them. If they were to continue higher, you've got that pivot there on the XHB, and then all this distribution right above that. So that's going to be your major resistance there. And then the ITB, which is above that pivot, but again, going into this major distribution level. So could there be a little bit more upside in these? Yes, but I would not be long them right now. VNQ backing off a little bit. This is also weak, down 0.5% in an up market. Again, it gapped down, it rallied back like everything else, but still unable to really pare back those losses. XLF, nice move here off the lows. So we had some reporters today. Citi, I believe, Wells Fargo. Look at that move on Wells Fargo. Outside, big outside move. JP Morgan. Let's take a look at JPM. JPM, yep, so that's through that 143 area. So nice move there. Bank of America as well. So outside move here. This is a temporary move here. I do not like financials here, but I wouldn't rule out a little bit more upside here in the XLF. I think this can get through this pivot high here. The upside is very limited after that, though. So once these earnings are out of the way, I'll be looking at financials for a short again. But for right now, they're holding up. We still have a few more. Goldman, Morgan Stanley, I believe, report next Tuesday when the market reopens. So we'll see what we get there. Speaking of Goldman, Morgan Stanley, broker-dealers here, continuing higher. This might want to make another new nominal high as well, but I'm not seeing a whole lot past that for XPD. Maybe 490, maybe a little bit of a pierce of that, and that's about all she wrote, if you ask me. Crude, so into energy. So, hey, you know what? Let's give it credit. It's trying to play that pattern out, right? So we've got this inverse head and shoulders head up, and we got a nice move on Friday's close. Markets are closing in about 30 seconds here. We're above the 50 moving average. On the weekly, however, you're still inside of this big red bar. So be careful of that. And I tell you guys all the time, like, look at the weekly. Like, don't lock into the daily time frame, because I can guarantee you go to any technical analysis chart that's going to do TA on crude this weekend. They're all going to be like, oh, inverse head and shoulders, inverse head and shoulders, inverse head and shoulders. And they're all going to say, go long crude, go long crude. But we still have that weekly inside bar. So I'm neutral on crude. I would not do anything with it right now. If you want to, if this triggers, meaning you get a close above this trend line here, you can buy it and then just put a stop, as right below the trend line on a closing basis. That's all you can do with it right now. But you still have a weekly inside bar, so do not neglect those weekly time frames, because oftentimes patterns on the daily fail because the weekly is not confirming it. So just be aware of that. But crude having a nice day, it did negate that daily inside bar, obviously, like we talked about the other day. And you got to close above the 50-day moving average here on a Friday, so that is a sign of short-term strength. So we'll give it the upside bias for now, but just remember that weekly time frame is not changed. XLE, a little bit of a nothing burger. This is holding up really well. XOP, same thing, although it's still kind of stuck inside of this, again, weekly. Big red bar there on the weekly, so just be aware of that. OIH continues to be a powerhouse. This probably wants to get to 350 here in the near term. I would not advise going long at this time. I still think that the risk is way to the downside here, especially if this market does start to roll over soon. I don't think anything will really be safe for this next leg down. Nat gas did continue lower here, but it does look like I do think we have a low here. I believe I have a cycle pretty much pegged for this week, so we'll see what we get. And this is still a really good support area on the weekly time frame. So we did wick through it a little bit, but nat gas getting very oversold. I am favoring a bounce still, possibly at least a 450, possibly even back up to $5. But nat gas was under a little bit more pressure here today. We'll see what we get next week. Dollar index, so very close here. So I was calling for 102 for quite a while here. We're basically there. Full disclosure, I did not purchase anything in the dollar yet, but next week I'll definitely examine it here, as I think the dollar is getting into a really good area, and also timing wise, I think the market's getting close, obviously, to a top anyway, and you can figure that's why I haven't really been bullish gold here. It is having a nice move up here, probably wants to go touch that trend line. I would avoid it like the plague right now. If you want to short it, you can. I would just, depending on your size, just put a stop as a weekly close above 2,000. If you're willing to risk 75 points on the upside, just position yourself accordingly, I guess. You could use the GLD too if you want to. So I wouldn't have a problem with that here, as I think the risk is way, and I mean way, skewed to the downside currently on gold, but gold's still holding up well. We'll respect it. Silver also up 1 3/4 here, but again, unlike gold, it's not making new highs, so that is a little bit of a divergence there. So silver is on the weaker side, and then platinum also, pulling back a little bit, but holding up well. It's just doing some backing and filling at the moment. I would not do anything with it right now. And then copper here, so nice move for copper finally. So you've just destroyed this bear pattern here. So that's a significant move to me. Now you could still look to this trend line if it were to correct at some point. But copper, this really just kind of negated this bear pattern. So you're above that red bar. That's a huge sign of strength. We closed above 420 on a weekly basis. That's a sign of strength. 100-week moving average. You're back above all 4 major moving averages on the weekly for copper. The only issue is that this big monthly red bar is basically, that's where you're going into. So that is going to be an issue moving forward. But for right now, big sign of strength there for copper futures. They're holding up very well. They are overbought. Do not chase them up here. If you want to try it, let them come back to $3.95, $4, and then maybe look for a higher low or something of that nature. But copper with a powerhouse move here. And then Bitcoin also continuing higher here. Let's take a look at, we'll flip over to Trading View here. So yeah, Bitcoin continuing higher right into that 200 moving average. So, who knows, maybe it can go test 20,000. But yeah, it's into that area. It is into some resistance. I do think upside is limited. I wouldn't do anything with it right now. Again, the weekly is still very ugly here. I mean, yeah, you have an outside move here, which is nice, but to me, this is just a squeeze, a counter trend rally until proven otherwise. You get above this pivot on a weekly close, then I'll change my mind. But until that happens, this is still under pressure. Ether doesn't look like oops, let me fix that. Just trying to zoom in there. So no confirmation above the 200-day moving average here, but still holding up well like Bitcoin. It is holding up a little bit better here. But again, the weekly pattern is essentially the same thing. So I would be careful with both of them right now. Although short term, you're back above that 200-week and that 20-week moving average. So a decent sign of strength here in the near term. Anyways, again, back over to the spiders. So let's see where we closed. Okay, so according to my trend line, you know, because everyone's going to have a different one. Looks like we like literally by pennies just closed above that on the spiders. So again, if you want to go with mine, you can. I wouldn't put too much stock into it. Let's take a look at the SPX. The SPX looks a little bit clearer, and I know the ES is definitely above that line. Either way you look at it, we're violating that line. We're threatening it. And I think that's going to be enough to at least get some bears kind of nervous over the weekend, which is what I want to see here. I don't want to short until I'm being laughed at enough. So that's really kind of the way I look at it. And same thing on the other side. I want to be, you know, laughed at when I'm buying. So I don't want to be, when everybody's on one side of the boat, I want to get over to the other side. So that's the way I look at it. And big takeaway too, again, just because we get above this trend line doesn't mean the bear market's over. Just keep that in mind. You're going to hear a lot about this stuff all weekend long, and it's really going to fester over the 3-day weekend. Anyways, guys, going to wrap it up here. You guys take care. Find me on carnivoretrades.com. Talk to you guys all next week.